Okay, welcome everybody to the first in our series of virtual webinars through Professional Women in Construction in New Jersey. Again, I'm Lisa Chwanski. I'm the president of the New Jersey chapter. And before we get started, I just want to give a big thank you out to our annual sponsors. You should see their logos listed here. These are the people that really help us to provide the programming that we do, and we entirely appreciate their support each year to help us do the things that we do as an organization. Next slide. We are going to be talking today about financial considerations for 2020. And I'd like to thank Withum and also the law firm of Giordano, Ciesla, and Halleran for their donation of time to our organization and their expertise to provide this seminar today, webinar. Next slide. I think there's a Meet the Speakers slide, if you could move me to that. Before we get started on the agenda, I'd just like to introduce our presenters today. We have Monica Halife. We have Elena Ladigna. We have Diane McNulty, all coming to us from Withum. And we have Maggie Spaziani. She's coming for Giordano, Halleran, and Ciesla. So thank you all for coming. I'm going to turn it over to our first presenter, which I believe is Monica. You can take it away.
Thank you, Lisa, and thanks everyone for being here. We're very excited to share all these this good content with you. I'll spend just a minute talking about Withum Wealth Management. We are the wealth management arm of Withum Smith & Brown, and we provide advisory and financial planning services to high net worth individuals, families, business owners, and small institutions. And we note that having the experts on the accounting side and the wealth management side working side by side seamlessly does add a lot of value to that relationship. And we are a fiduciary, not a broker. And what that means is that by law, we must place our clients' interest first before our own. So we do not sell any product. We do not participate in any commissions. The only way that we get compensated is by charging a fee on the assets that we manage. So our clients don't only get a solution that's transparent, it's also very cost and tax effective. We do everything in-house, so you are going to get those solutions to be tailored to your personal situation. And with that, I'll get started on our presentation, and I'll start, if you could go to the next slide, please. Next one. With a brief recap of where we've been this year. And this year, of course, as we all know, has been anything but ordinary, and it's been difficult, and it's been all over the place, and probably a lot of us could not imagine what we were going to be doing at this point. But in terms of the market, we started with a good market. The economy was strong in the beginning of the year. The market was reaching new highs. But come February, that all changed. And it all changed once it became clear that COVID was going to be a lot worse than initially anticipated. And the market, being a forward pricing mechanism, started, volatility shot up, and the market was all over the place trying to really anticipate what is the impact, right? Because we have such a massive and such a sudden halt to economic activity. And that's not only here in the US, that was across the globe. So many countries experiencing significant contraction at the same time, even worse than the Great Depression. So we had a lot of historic movements in the market. The market had the fastest 30% decline since 1933. Typically, you go from a high to a down of 20%, it takes 3 to 4 months. Well, this time it took 3 weeks. And the decline was 34%. But then when things started to look a little better and there was a little bit more optimism against the fight against COVID, the move on the other direction has also been pretty extreme. So from the lows in March to now in August, we had the strongest 100-day period in a long time again, and the market's been up more than 52%. And we think there's a bit of a dichotomy in the economy. There's some industries, obviously, that have been, survivors and have been doing very well. And there's some others for which it's going to take a bit longer to get back to pre-COVID levels. If you can go to the next slide, please. So, and there's positives and there's negatives, and we'll talk a little bit about both. But, on the positive side, there's still a lot of cash on the sidelines. Cash that left the market was probably waiting for a good entry point. But, given the very quick and violent moves at times, they might still be waiting for that entry point. You have the central banks here and across the globe being very, very, very easy and having a lot of liquidity and stimulus. And that's probably going to remain for some time. And you also have some stimulus on the fiscal side, which also provides some support. And, on the fight against COVID, there's also been some progress, and you have brilliant minds everywhere, racing to have to come up with a therapy or come up with a vaccine. So, we are going to get there. It's just a matter of time. But then when you look at some of the concerns, the rebound has been very, very narrow. And what I mean by that is that it's only been a handful of names, mostly technologies, that have driven that rebound. So, you want to see a more expansion on that rebound from other industries. You do have, we're going into colder weather, so there's still that risk of that second wave. We'll see now that schools are going back and everything. But again, this environment creates opportunities for rebalancing, for tax loss harvesting, and for planning, which we will talk about in a couple more slides. If you could go to the next slide, please. Thank you. Now, looking forward, this year we also have elevated uncertainty and we have an election. And, the markets are pricing elevated volatility, and, there is the potential for perhaps a contested election. It's just hard to tell, but that creates uncertainty, and markets do not like uncertainty. And also, given the move that we've had, the markets are not cheap. So these names that led the recovery have high valuations. However, there's other names that have not participated as much. So again, there's still some opportunities. If you could go to the next slide, please. So I'm just going to spend a few more minutes talking about the election. And, there's about 55 days before then. But, in election terms, I guess that there's a lot of things that can happen. And you're just going to spend a few minutes on each different scenario, and then which companies can do better or could be a little bit more challenged. So the first scenario we have is the status quo. So that means Trump remains on the presidency, and the Senate is Republican and the House is Democrat. If you could go to the next slide. Now, for this scenario to pan out, it's going to be very dependent on the economy. It's also going to be dependent on what the COVID, how COVID develops from here to now. Because typically, if the economy is not doing well, it's not good for an incumbent. So things that could help would be another fiscal package. If we get another fiscal package, it could give the economy, a boost. And if this is the scenario that pans out, you could have a potential positive reaction by stocks, because you would have, the fear of higher taxes and the higher regulation should abate. However, then you would have the increased concerns about the trade disputes with China. So the types of companies that could benefit in this environment are smaller type companies that benefit from the lower regulation. You could have the technology names, financials, companies that also benefit from higher defense spending and energy. Now, the companies that could be more challenged in this environment are the ones that have significant relationships with China. Think Apple, or just companies that have a massive or huge amount of trade with China could be challenged. If you could go to the next slide. Now, blue wave is the second scenario, and that is Biden takes the presidency, and then the Congress is controlled by the Democrats on both ends. And here, obviously, there's talk about higher taxes. There's been talk about increasing the corporate tax rate to 28%, increasing taxation on the Social Security above 400,000, increasing the top marginal tax rate, and some other, like eliminating the deduction, the business deduction, having not the preferential capital gains and dividend treatment for high earners, and reverting the state tax exemption to 5.49 million. If you could go to the next slide. Now, there might be an initial reaction of stocks that they could fall, but this could be a long-term buying opportunity. And what happens is that sometimes markets really might overestimate the likelihood and the impact and the magnitude of some of these moves. So, they could fall initially, but it could be a long-term buying opportunity. And an important thing is that economic impact could be lessened if the spending is going to outpace the taxation increases. And, you might not get the full 28%, you might get a 24%. So it might still be balanced with the spending. Now, here you could have names and companies that benefit could be those that are involved in infrastructure, material, construction, utilities. Now, just a side note on infrastructure, there's relatively bipartisan agreement that infrastructure, especially in the US, is a huge need. So these types of names might benefit in either scenario. But going back to the blue wave, there's education, any company that would benefit from cannabis legalization, any green stock could benefit in this scenario. Next slide, please. Now, this is the last scenario, and perhaps it's not getting as much attention, but this could potentially be a good or one of the best outcomes for the stock market because, one, you do have a system of checks and balances. You would have better trade prospects, and you would also have the continuation of low tax, low regulation regime. And what this scenario is you have Biden on the presidency, but you have a split Congress. So companies that can benefit is infrastructure, companies that have a focus on climate change, hospitals, insurers, and again, all the clean energy. So it could be electric cars, it could be batteries, it could be solar, it could be biofuel, but those would be some of the names that tend to benefit with that. And again, it's early still to give some weight to either scenario, and as we all know, polls could be not as reliable at times. So it's still early to tell. The important thing is that even though there might be a reaction initially, depending on what's the outcome, and we do anticipate higher volatility, in the long run, stocks will end up trading based on their fundamentals. So with that, I'm just going to pass it on to my colleague, Elena Ladigina, and she's going to talk to us a little bit about planning in this environment.
Thank you, Monica, very much. So Monica talked a lot about specific opportunities when it relates to investing and it relates to the markets. So we're going to kind of shift a little bit, and we're going to focus more on long term and focus more on things that you can control. When it comes to markets, as Monica just said, there's just so much uncertainty. There's a lot of moving parts, and none of us really have control on what's going to happen. But what we do have control is what we can do for ourselves and some of the planning that we can do. So if we go to the next slide, one more slide. So we truly believe that the success of getting through any crisis or any life situation really hinges on the planning that you do before the crisis or before the change, during, and then after. So that's really what we're going to talk about. So what are some of the steps that you could take? So the first step is we think about planning ahead of a change or crisis. You know, right now we in COVID, so kind of a little bit with that focus, is that you could do some proactive planning and have a very solid long-term plan. So what does that really mean? So that means that you want to take an inventory of your assets and evaluate real risks. Look at your financial situation and find out what are some of the exposures that you have. Do you have enough cash on the sidelines to cover your living expenses? Do you have too much risk and not enough liquidity? So those are some of the things that you want to think about. Kind of take the inventory of assets, look at your risks, and then see, are you balanced? Do you know, or where your exposures are? And based on that, then you want to kind of look at your plan and maybe make some changes. You know, one example might be you have a child who is going to college in the next couple of years. So you've done a lot of good planning, but now you're potentially going to be in a distribution phase for a period of time. So you want to alter that plan to accommodate some of the goals and needs that you have that are upcoming. It's also very important to review your housing costs that include your everyday expenses, kind of those essential expenses. Create some cash flow projections. Do you have more money coming in versus going out? And potentially this would be the opportunity for you to consult with an advisor or do it yourself. And really the goal of this step is to understand what your inflows and outflows are, because that's going to help you have a better and more solid footing when it comes to any potential crisis or change. As part of that, you also want to make sure that you have a rainy day fund or emergency fund. You know, when it comes to emergencies, cash is going to be king. So you want to make sure you have enough saved up to cover loss of income, any emergency medical expenses, or if you have to replace a roof on your house. And the amount is really going to depend on each person's situation. It's going to depend on your comfort level. You know, we have clients that are comfortable with maybe 3 months worth of expenses. I have clients that like to have a year and a half worth of expenses. So it's really, you want to think about what makes you feel comfortable. It also largely depends on availability of other resources. So can you tap into other sources of income? Do you have an investment portfolio that is easily accessible? Do you have outside liquidity that you can tap into if you have the need? And the last piece is also how risky is your income stream? And what I mean by that is, someone who is employed in an accounting firm with a salaried position who's been there for a long time will have a lot more, their income is going to be a lot less risky than maybe somebody who is working on an hourly basis, whether it's, in childcare or another industry. So you want to think about, how risky is your income source. And then lastly, you want to make sure that these rainy day funds are in a savings account that's easily accessible. And again, the amount is going to depend on your comfort level. Just a rule of thumb, we always like to tell our clients 3 to 6 months worth of expenses. But again, kind of think through all those other aspects that I mentioned when you decide on how much is appropriate for you. So next, please. So another part of planning ahead is having a crisis budget. So what is a crisis budget? Crisis budget basically eliminates all non-essential spending and focuses on food, shelter, and transportation. So no matter what happens, you need to have a roof over your head, you need to have a food on the table, and you need to get to work. So you want to make sure and have a really good understanding, what does it cost for you to live your life without kind of any non-essentials and any of the luxuries. And then that understanding is going to really help you know where your money is going and avoid panicking. Because when we panic, we make emotional decisions that might not be good for you long term. You also want to think about and plan for periods of prolonged uncertainty. As it relates to today and the COVID world, you want to think about, what does that look like for you to work from home? How can you work with your partner or your family and your employer to make sure, that you can get your work done and live life? Children are doing work at home. We were talking earlier about Monica has two little ones doing virtual learning. I have little ones, so it's, we had to adjust kind of our lifestyle and what we do. So you want to think through that. And then the last piece that sometimes people don't think about is you want to understand your benefits. It could be your leave benefits, it could be your health benefits. And again, the point of all of this is that if you have the knowledge and you know what you could do, what your options are, you're going to be less likely to panic and make emotional decisions because you're scared or nervous, and you're going to really have kind of that foundation to make the decisions that you need to make no matter what happens. Next, please. So after you've done all this great planning, now we're in a period of change. So now in the period of crisis. So what can you do while the change is happening? So this is really kind of this is where we're living today, right? The planning ahead we did before, so now we are in the change. So what can you think about? First and foremost, don't panic. This too shall pass, and it has. We've had all kinds of crises in this country and around the globe. So don't panic, and don't throw away your long-term plan. It might feel scary. You might have a temptation to just kind of, put the money under the mattress, so to speak, but don't throw away your long-term plan. Think through it. So if you're in a situation where you're close to retirement, you have big expenses coming up in the next, say, 2 years, then you want to go ahead and plan for those withdrawals and have an action plan. As Monica discussed, as far as the markets are concerned, we've been in all-time highs. So if you are going to be retiring and need income, go ahead and plan for it now. Liquidate some of your investments and have a strategy on how you're going to take the money. But on the other hand, if you're still time away until you're going to need to tap into your investment portfolio and you're going to need those resources, remember, investing is a marathon, not a sprint. So you don't need to make dramatic changes just because we're going through this. The other thing you want to think through is the change that is happening permanent or temporary? And that specifically really relates when, if we think about loss of income. And the reason why this is important is that it's going to help you determine how drastic your changes and adjustments need to be. So, so if we kind of think about, loss of income, we've had clients that might have had a temporary loss of income or reduction in income, or we've had clients that said, you know what, this kind of was a catalyst for me to stop working or retire early. So what you want to think through is that you would ask yourself a question: do I need to adjust my lifestyle? And if I do need to adjust my lifestyle, how dramatically? And again, that goes back to the question of whether this is a permanent or temporary situation. You also want to think about implementing that crisis budget that we talked about, where you really only focus on your most essential spending, and that would really be applicable in a situation when you might be in this, maybe you haven't planned as much ahead. So that would be, kind of the first step. Some people also forget that if you're in a situation where you're having a hard time paying your obligations, your bills, contact your creditors. You might be surprised that a lot of them can be flexible in creating a plan that is doable for you to pay your bills. Because at the end of the day, they want to get paid, and they rather get paid something versus nothing. So think, if that's your situation and you're facing that situation, think about contacting your creditors. The other option is to borrow from your 401k or your whole life policy. Again, you want to look and evaluate all your options. And if you have no other options, that might be a good option for you. And in some ways, it's almost like borrowing from yourself. And depending on the type of 401k you have or the type of whole life insurance policy you have, they might have very low interest rates that you'll be borrowing. So it might be much better than maxing out your credit card and having to pay 20% or even going to outside borrowers. So it might seem like not a best solution, but giving your options, it might actually be a good solution. You just have to get the information. When it comes to the portfolio, you want to make sure that your risk tolerance is accurate, and you need to rebalance if needed. Again, markets have been quite volatile, so you want to look at your risk profile and determine what is the right mix of stocks, bonds, and cash. So risk is determined by the mix, and it's based on your personal emotional ability to take on risk. It also based on the time horizon and also your income needs. So this is a good time to review that you have the right mix. If you're investing in target funds within your retirement accounts, that is kind of done within those funds. So that might be appropriate for you. And if you're doing it yourself, it's a good time to review your allocation. Make sure that all those parameters are still reflect your current situation and you have the right mix. And remember, keep a long-term focus. Again, unless you have something coming up soon, remember this is a long ride, and then the most important thing is to have that diversified portfolio and focus on those long-term. And last but not least, you want to think about advantages that sometimes these type of crises present themselves. So are there opportunities to save and take advantage of this environment? So I'll give you a few examples that we have been coming across and helping clients with. We have a very low interest rate environment. So it might be an opportunity to refinance your home. So why would you refinance your home? One, you can reduce your overall cash flow expenses because you might be paying a much lower interest rate. You might be also able to cash out some of the equity. So if you need a little extra liquidity, so refinance might be a good option. What if you need liquidity and your home is paid off? That's another opportunity to look into taking a mortgage, maybe even just a small one, to have that extra liquidity because the rates, again, are so low right now. Do you have a large pool of retirement assets, which means that you're going to have a large tax obligation when you start taking out after 72 now, when you have required minimum distributions? Maybe you should consider a Roth conversion, whether you might be paying a tax now, but you will pay less taxes later. And then think about how can you reduce your current taxes. Think about don't liquidate investments that have high capital gains, or look for losses in your portfolio to offset some of those gains so you have less of a tax bill today. We also had a unique opportunity this year for those who are over 70 and a half and have required minimum distributions to not take those required minimum distributions. And what does that do? That reduces your current taxable income and thus increases your cash flow. So that's another opportunity that we had this year as part of the stimulus package. And then the last point really is the most important one, I think, of all of them, is to take care of yourself. I put this kind of a funny airplane picture because, when you get on the airplane, they say, put on your mask first and then help others. And that's really what you want to remember. There's a lot of conversations about the emotional toll that crisis like we're going through are taking on people. We're all kind of at home. There's less things to do. We all with our families, even those that we love, but we have so much time together. Do something for yourself. Go for a walk, exercise, whatever makes you happy. Go outside and read a book for 30 minutes. Whatever, but make sure you take care of yourself because you can't help your families if you're not helping yourself. So next, please. And then last but not least, when it comes to kind of the steps to getting through the various stages of changes, what do you do after the change? And really, when the crisis is over, you want to reset your plan. You want to go through those initial steps that we talked about at the beginning and make sure that you make any adjustments to your plan that you've maybe saw that you had holes in, or maybe you didn't plan in certain areas of your life enough. And resist the urge to splurge. We've all been kind of maybe pent up spending desires. Make sure that you kind of go back, reset your emergency savings, make sure that you go through that, through those steps again, as you see on the slide. And make sure that you are there to survive the next stress test, hopefully not anytime soon, before you really kind of go back to your everyday spending. And again, I can't stress enough, remember this too shall pass. Don't panic. you're going to do the planning, you've done the planning, and you'll be able to get through this with good planning. So with that, we're going to kind of shift gears a little bit, and we're going to shift from talking about individual financial health, and we're going to go talk a little bit more on the business side. And I'm going to turn it over to Diane McNulty, who's going to talk about some of the aspects there.
Good morning, everybody. Thanks, Elena. Thanks, Monica. So yeah, this has certainly been a year that's been unprecedented, and things seem to be changing on a daily basis. So I wanted to spend a few minutes to talk about things that you should be considering if you own a business. A few areas of consideration and reminders as you continue to navigate through this crisis period, through the remainder of the year and perhaps even into the beginning of next year. So next slide, please. So the first thing I wanted to talk about is cash flow considerations. So, construction has been deemed essential. So many of you with construction companies, probably were working during this crisis period, and had good work and good revenue levels, and that's great. But I wanted to talk about cash flow because we need to be paid. So accounts receivable aging and collections, it's key to continuing to manage your business. So the reminder here is to be vigilant, understand, the aging of your receivables, how much money is out there, work on collection daily and make it a priority. Make sure you have open communications with your contract owners and customers. Find out, what's going on with their business, and, work out, deals to collect on a timely basis. It's unfortunate, but beware of customer bankruptcies and possible clawbacks. It's out there. You may have been paid, and you may think, oh, a customer had an unfortunate declaration of bankruptcy. It doesn't affect me. But if you were paid within 90 days of that filing, you may receive a letter and a demand for a return of some of that money. Consult with your attorney immediately if you receive any of these, or you receive notice of a customer bankruptcy. So you make sure that you're in front of this and don't think it doesn't apply to you, and make sure you understand your rights as a creditor and as a vendor of this unfortunate customer. With receivables and collections, mechanics liens, use them. Don't forget you have this option. Again, consult with your attorney to make sure that your rights to payment and are enforced, and that you have the ability to place these liens on property where it makes sense to do so. New customers, there's a lot of work still out there, and you may be approached for a new customer, a new contract owner. Do your due diligence and make sure you understand who you're talking to. Do have referral checks and/or some kind of a credit background check on new customers. Make sure that they have a good reputation, so that you're not getting involved with someone and excited about working with someone that's coming because maybe they are short on people to come to, because maybe they have problems with all of their other vendors. New customers also, consider some of your payment terms and your progress payment terms and your contracts. For new people, maybe there's a way to restructure your contract a little bit to have more money up front, so that you're ensuring yourself as you go forward into the new relationship that it's going to be a good one and that everybody's happy in the end. From a cash flow perspective, the PPP program has been a wonderful cash flow initiative and stabilizing event in every business. It's provided liquidity in a very uncertain time to many businesses. From a metric standpoint, construction was one of the largest industry groups receiving PPP funds from the SBA, and were some of the recipients of some of the largest loans. So it has had great stabilizing effect in the industry. As you all know, the covered period's been extended to 24 weeks. So people who received money initially in the initial offering, your covered period is probably going to start to come to a close on or around October 1st and shortly thereafter. So make sure you're talking to your accountant and your banker that you're set up to go through the forgiveness process. With the changes and the restructuring of the program a little bit, the amendment to it, you know, forgiveness is, you should probably be receiving 100% forgiveness, which is great and what the program was intended to do. But again, I mentioned that a lot of us in construction were working during the period. And make sure you're talking to your accountant and your tax advisor about the possible taxability of some of, not necessarily the proceeds, but what ends up happening here, and there's been much talk about it in the news lately, that to the extent that monies were used while you were paying employees to work, your wages were reimbursed, and you may have your profit margin on a job be significantly higher than you anticipated, thereby having a taxable income. Make sure you're talking to your tax advisor early so that everybody understands how your proceeds were deployed, how they were used, and if there is some amount of tax to be paid, make sure you're in front of it and you know what that liability may or may not be as a result of this awesome program. And then something that I wanted to touch on in New Jersey that kind of didn't get the coverage that it deserved is this New Jersey Business Alternative Income Tax, the BATE initiative. So Governor Murphy signed into law in January of 2020, new for 2020, an alternative business tax for pass-through entities, which are your typical partnerships and S corporations, whereby these pass-through entities will pay their New Jersey taxes at the corporate level, or entity level, should I say. And this is to alleviate some of the negative impact of the limitation in the federal, state, and local tax deduction to make it more favorable for New Jersey businesses to pay their taxes and have them deductible at the entity level. So this program is in effect. Talk to your tax advisor again. It's a program that you elect into. The election to enter the program and to pay your taxes in this manner is due March 15th, I believe, of 2021. Make sure it makes sense for your business. It may not make sense for everybody, particularly if you have non-resident shareholders or partners. But again, consult, know it's out there. It's a great initiative that will help save tax dollars for pass-through entities and their owners. So make sure you're communicating with your tax advisor to understand if this will benefit you and to make sure you make the elections on a timely basis. So next slide, please. So the next thing I wanted to talk about is succession planning. So it's always a good time to have plans in place if there's a sudden absence in management. And I think the pandemic has reminded us of making sure that we have those plans in place in the event of something sudden, and then just overall. So emergency plans for daily operations and management are so important. Make sure you have a plan in place for these daily operations. Identify who will operate your business and make decisions, who will sign checks, what limitations on decisions and contracts and or anything else that they can obligate your company for. What can someone do? And again, another, consult your attorney. Make sure you have the proper paperwork in order. You'll probably need powers of attorney, perhaps some corporate resolutions, but I'm sure there'll be legal documents that'll need to be drafted in order to have a seamless transition of management of your company in the event of, a sudden event. And then also, it's always a good opportunity to plan for transition of your business in an orderly manner, and that can come due to retirement or just an exit plan, or unfortunately perhaps something more sudden. So the key is to plan. Talk to your accountant, talk to your attorney, and develop that plan. Owner buy-sell agreements and cross-purchase agreements. That's a great thing to make sure if you have a partner that there's a seamless transition from one to the other. Make sure that you contact your insurance agent. Discuss how life insurance may provide liquidity in the event that there's a transfer of ownership. the other thing is do business valuations. Make sure you have an understanding of what your business is actually worth. It may cut down on, points of contention or points of disagreement in a transition. Knowing what your business is worth and having all parties understand that and agree to it in advance. Consider doing valuations annually or every couple of years to make sure you're always up to date with those numbers. And, sometimes transfers can be gifting as well. Consider this. The tax laws right now are favorable. The estate exemption is very favorable right now. Obviously, nobody can predict what tax law will change into, especially in the event of a change in the federal government or the elected officials or Congress and what their plans may be. But estate exemptions are very favorable right now to use gifting as a transfer of ownership to your next generation, if that is in fact your plan for your business. Next slide, please. And the last thing I wanted to touch upon is technology. So everybody has learned to work from home and be remote. So technology is hugely important right now. Take opportunities to invest in upgrades and cloud-based applications that make working remotely easier for your employees and easier for you to manage and gather information that you need to make strategic decisions. You may have programs in place that have applications and opportunities that you don't even know are out there, like Microsoft 365 is one that I can think of that has applications that are really underutilized by many companies. So talk to your IT consultant, find out what you're currently using that can be enhanced or upgraded to make a remote work situation much easier. And then beware of cyber crimes. These folks are out there. We're working remotely, and the opportunities are expanded. There's more points of entry into your business and your stream of information than ever before. And don't think that, oh, I'm too small, they wouldn't be interested in me, or that can't happen. It happens. It's been happening. Work with your IT consultant, training your team. It could be as simple as that. Password security, password sophistication, just training of, to think before you click on an email or an attachment or something like that could be hugely important. So again, work with your IT team, your IT consultant to make sure that there's proper training for your team members. And then insurance, cyber insurance is hugely important. Understand your policy. Again, meet with your insurance consultant and make sure you understand what types of cyber crimes and or losses you're covered for, and make sure you have adequate coverage, especially since the way you're doing business and the number of users and remote users may have changed since you initially discussed your policies and your coverage. Next slide, please. So I think more than anything else, you've heard me say consult, consult, consult. I think in times like these and when things are changing, making sure you identify your team and making sure you have everything covered. Don't think you do. Know you have it covered. Know you've had these conversations and you've discussed these items with your accountant, your attorney, your banker, insurance advisor, IT consultant, and your investment advisor. Communications, keep them open, keep them frequent. And I think if you do this and have your team in place, everybody will get through this pandemic, and hopefully we're all going to come out stronger on the other side. So with that, I will turn it over to Maggie and allow her to talk more about some legal matters as it relates to estate planning and trusts.
Hi guys, so I'm going to be talking to you today about estate planning during these times. We're going to be shifting back kind of to the individual side of things, as Elena previously spoke about. Can we go to the next slide? So estate planning, I think at the height of this in mid-March, we were having an influx of people with documents that were ready to be executed, calling in, when can I get this executed in the beginning of this pandemic. We also saw an influx of new clients wanting to update or, create plans if they didn't have any plans in place. So putting aside the documents that are vehicles and estate planning vehicles that are available, this pandemic and personal needs of each client really drives, what type of estate plan is going to be put in place. So everybody's goals and needs are going to vary, whether you've just had a new baby, maybe you're a business owner, maybe you're nearing retirement, maybe your goal is estate and income tax planning, maybe you just went through a divorce, perhaps you're trying to help your parents do some elder care planning. So everybody's goal and needs are going to be different, but I think we're all subject to outside forces that are also going to impact your estate planning needs. So, with COVID and the upcoming election, a lot of changes have come into play in the estate planning arena. I'm going to get into, 4 basic documents. And as I go through these documents, I want you to keep external factors in mind. The will, the trust, the power of attorney, and the healthcare directive will be the basis for the conversation, but I'm gonna, touch upon outside factors. Can we go to the next slide? So again, with this global public health concern, you're seeing an influx of people wanting to get documents in place and execute those documents. At the beginning of this, we weren't meeting in person to execute those documents, and we were relying on remote notarization, which, for the month of April, that remote notarization law didn't help us in terms of executing wills. It was permissible for powers of attorneys, and trusts. Trusts don't even have to be notarized. They just need 2 witnesses. But wills, the remote notarization wasn't available. So if somebody was in an emergency situation, the first month of this, you were relying on that client, coordinating a Zoom with them and having them, bring in their own notary or witnesses, and getting the documents back to you. And Zoom doesn't show you everything. So a lot of times you're getting these documents back, and there's coffee stains, or there's gummy bear stains, or sticky documents you get back. So the first month of this was very challenging in the execution phase for estate planning documents, but I think now it's kind of smoothed out. People are meeting at picnic tables with us to execute the documents, as long as everybody maintains social distancing. And the remote notarization laws have kind of come a little bit further, allowing remote notarization of wills, with still certain barriers in place. But I think the biggest transition has been just with the nice weather and, seeing people okay with coming outside to execute these documents. Some other external factors, you're seeing people with business owners, maybe now we're seeing more of an influx with business owners ready to transition, whether it's, within the family, engaging in business succession planning within their own family, or whether they have, want to get buy-sells in place with, their partners that aren't family members. So we've really seen an influx of that type of estate planning clientele. The upcoming election kind of has everybody on edge with their estate plans, because right now we have really favorable high exemption amounts. So maybe your estate plan isn't really estate tax savings oriented. Maybe it's just, you don't have an estate tax concern. And now people are starting to think, okay, if it goes, goes back down to 5.5 million, I am going to have an estate tax problem. I need to engage in some fancier estate planning. Also, too, New Jersey still has the inheritance tax. That inheritance tax planning is very much still in play. We don't currently have a New Jersey estate tax. Governor Murphy eliminated that. However, again, with the possible change of guard, you don't know what's going to happen. Next slide. And in addition to the election, regardless of, whether it's the regime stays the same, the federal exemption is sunsetting on January 1st, 2026 to that 5.5 million. So again, that creates for some people more of a need for estate tax savings, estate planning. And then the New Jersey inheritance tax, it remains Class C beneficiaries, those not related to you, siblings. Let me back up. Those non-lineal descendants that are your siblings are Class C, and they are taxed between 11% and 16%. Anybody outside of that is Class D, and that's 15%. So you are seeing, New Jersey's inheritance tax still come into play with estate planning. Next slide. Again, just a primer for you. We're going to go over basics of a will, trusts, whether they are just a revocable trust, where you have no estate tax savings really at play here. It's more for family planning, whether you have a second marriage or you want to keep strings on your children's inheritance. Then we'll talk about a power of attorney and the healthcare directive. Next slide. Okay, so your will. In your will, you're going to be naming an executor. Everybody's going to name an executor. Your executor's role is limited to the probate process. So it could be 6 months or it could be 18 months, depending on if you have an inheritance tax return or any tax returns that you have to file and get releases for. You could also have a guardian issue if you have minor kids. Your will's going to name a guardian. Remote notarization, as I said earlier, it is permissible now under the temporary regs, but it has to be, you have to keep a recording for 5 years. Wet signatures have to pass to everybody. So we're really utilizing, if people are not high risk and okay with public spacing outside while the weather's nice, that's been the most favorable way to execute a will. Because like I said, if you're sending it off to people and Zoom supervising, Zoom doesn't show everything, and sometimes we're getting the documents back and they're sticky or they have like coffee stains on them. So the remote notarization in terms of executing a will hasn't been terribly helpful because of, the recording requirement and having the wet signatures have to pass to all the different players, the notary, the witnesses, and the individual signing the documents. With your will, you could also consider inheritance tax planning, insurance in the state of New Jersey if it's left to a named beneficiary, even if it's a Class C or Class D beneficiary, is exempt from inheritance tax. So that's one good tip. I think New Jersey will always have an inheritance tax, regardless of, this is just my opinion, regardless of, what the election results hold. So using insurance, if you want to leave something to a sibling or a niece or nephew, you can bypass the inheritance tax in New Jersey using insurance to do that. And then, with fancier planning, do you want to leave your inheritance to your spouse or kids outright? This doesn't have any bearing on taxes. It's more of, you know, what are your needs? What are your goals? What are your kids, you know, how are your kids? What's going on with your kids? So could you flip to the next slide? So that's where trusts come into play. You know, maybe you're concerned, if I pass away, my spouse might remarry, and I don't want my wealth going to a new spouse. So a trust is a good way to ensure that when you pass away, your spouse is taken care of, but there are strings attached to them invading maybe the corpus of that trust. So there's something left to pass down to your kids, or if you don't have kids, maybe there's just something to pass down to your side of the family when your spouse passes away. Trusts are also good with generational wealth planning. If you have a lot of wealth and you want to do some dynasty planning to your grandkids and possible great grandkids, where that trust just runs into perpetuity down your lineal line. Certain types of irrevocable trusts are good estate tax savings tools. If you have estate tax concerns or you're looking forward to the decrease in the exemption, those would be an irrevocable trust. Also, too, trusts can be good creditor protection devices. If they're irrevocable in nature, they can add creditor protection for individuals. Special needs or disability, you know, as your kids mostly we see this with people who have kids. They start to get older and they either have some kind of disability or mental health issues start to come out during their teenage years. So trusts are a good vehicle, you know, to keep the funds protected and to protect your kids from themselves and from predators. Next slide. So just continuing with trust here, the passing your wealth to your surviving spouse in a trust, you're going to look at, you know, having a marital deduction available when the first spouse passes away, if it's properly structured with all the income coming out to the surviving spouse during their life. You know, we see trusts a lot with business owners, where especially now, you know, business owners are starting to engage in succession planning maybe a little bit quicker. This pandemic has pushed some people to transitioning control of their company. So trusts are good vehicles to receive interest in companies. And, you know, you can consider generational wealth planning with a trust. And instead of things going outright, you can attach certain ages to them. Or they can, again, go into generation perpetuity planning. Next slide. You know, the federal exemption, again, is right now $22 million for a married couple. So the past few years, you know, the estate tax concerns were, for planning purposes, were not in the majority of everybody's wheelhouse. But again, in 2026, we know it's gonna go back down to 5.4 million for individuals, and 11.18 for married couples. And what the election holds, you know, nobody can tell. I think Diana mentioned that, you know, we don't know what the election will hold on the estate tax. If you are wealthy enough to make gifts in excess of the exemption amount, just know that it's taxed at a 40% rate. Next slide. So, you know, in your trust document, you're going to name a trustee, and a trustee's role is a little bit more extended than an executor, because your trust is going to go a lot longer than the whole probate estate administration process. So within your trust document, you want to consider, you know, who's going to be there in the long run. So you're going to have to consider successors too. And if you don't have family that's available to serve, you can look to certain advisors in your group. You know, there are certain financial institutions that have trustee services. If you know, I know sometimes accountants will serve in these roles, and sometimes people like for their kids, when their kids to reach a certain age, they like their kids to the idea of their kids stepping up as co-trustee with a trusted advisor. Okay, next slide. I'll start to talk a little bit quicker here. You know, the execution and funding your trust, once you get everything executed, you want to make sure you properly fund that trust that you put in place. You have to coordinate your beneficiary designations, preparing any deeds, giving bank instructions. And this is really, you're going to rely on other team members. You're going to want to coordinate beneficiary designations with financial advisors and insurance agents that your clients are dealing with. Next slide. The power of attorney, that is a third document in play. Everybody should have a power of attorney. There are two types, durable. You know, really trust your agent because a durable can be used at any time. There's no there's no requirement with the durable power of attorney that you have two certifications from a doctor. Whereas with the springing, there are practical limitations because your agent has to produce certifications that you're incapacitated to use. Execution of a power of attorney, you need a notary and one witness. And remote notarization is allowable with a power of attorney. Next slide. A healthcare directive. As a competent person, you have the constitutional right to refuse medical treatment, but a healthcare directive really comes into play when you're incompetent. So you lay out your wishes in advance with the healthcare directive and you name your agent. So when you do become incompetent, there are complete instructions and designation of a healthcare agent. Next slide. Okay, so just a review. You know, everybody needs estate planning, but that estate planning is really going to depend on each individual's goals and needs. Remember to coordinate with your team members, have flexible documents, revisit your estate plan, and you know, just know the estate planning laws are constantly changing. So in addition to your families changing and evolving, you have to really pay attention to what the changing laws are. And with that, I think, you know, Monica, Diane, Elena, I've really enjoyed presenting with you today. Thank you. I'm going to turn it back over to Lisa.
Thanks, Maggie. And thanks everybody for participating today. We're so glad that you joined us for our first virtual webinar. And thank you so much to our expert panel of speakers. Unfortunately, we've come a little bit past 10 o'clock. So we won't be able to do a Q&A section, but what I will do is send the PowerPoint presentation out to everyone who's registered for the program. And I think it's page 3 of the PowerPoint presentation includes the contact information for all of our expert speakers today. So thanks again to everyone. Thank you to our sponsors and to our expert panel. I hope you all have a great day, and I hope you will look for some future PWC programs that we're going to be running a couple of virtual programs throughout the end of the year. Just as a quick FYI, we're going to be distributing our PWC New Jersey scholarship application. So if you have any students who are looking, female students who are looking to be in a STEM related program, degree program, we do have two $2,500 scholarships that we distribute each year to our PWC members. Unfortunately, our Women of Achievement is going to be postponed until next March. We had hoped to kick it off in September, but it doesn't look like we're going to be able to get a group of 200 people together anytime soon. So we're moving that into March. Look for some additional programming to come out, and thank you again for joining us this morning. Have a great day.
Bye, everybody. Thank you.
Bye.
Thank you.
Thank you.